Is PMI really all that bad? Listen, there are a lot of voices out there, looking at you, Dave Ramsey, who will say that you should avoid PMI or private mortgage insurance at all costs. But that might be unrealistic and a bit of an oversimplification. First, let's take a look at exactly what PMI is. Private mortgage insurance is just that. It's an insurance policy that your lender takes out to cover their losses if you should default on your loan. Think about it this way. At a 20% down payment and an 80% loan amount, the bank is taking on 80% of the risk in that home purchase. But at 20%, they think you've got enough skin in the game that you'll do whatever it takes to make sure you don't default. You move lower than that number, and they start to get a little bit scared. And that's where PMI comes in. So here are 5 reasons why the existence of PMI might be a better thing than you thought. First off, prior to the advent of this type of insurance, nobody could get a mortgage if they had less than a 20% down payment. With the advent of PMI, a dramatically larger number of people became eligible to buy a home. 2, it can dramatically increase your purchasing power. If you don't have to get to 20%, all of a sudden it becomes possible for you to get into far more homes than that would have been possible otherwise. Number 3, it keeps more money in your control and in your pocket. The average person spends thousands of dollars on furniture and moving, etc. when they move into a new place. If you don't have to put all of your money into your down payment, you have more left over to make your new house a home. Number 4, it's cancelable. The policy only remains in effect until you get to 20% equity in the home. And as your value appreciates, all of that appreciated equity goes on your side of the ledger. So most people don't end up paying their PMI nearly as long as they think they might. Here's the 5th reason, and maybe the biggest one of all. For a lot of people, saving up to 20% is like chasing a snowball downhill. In most parts of the country, wage growth has not grown nearly as fast as homes have appreciated in price. The money that you spend on PMI right now may very well be significantly less than the increased value of that home that you waited on buying. So there you have it. What do you think? Is PMI something to be avoided at all costs? Or is it maybe an entryway into home ownership?